I'm Russell Clark, and this is VixShield's Morning Outlook, where it isn't news till we talk about it. Good morning. The gates all opened this morning, and that means our Iron Condor command is live for the day ahead. Welcome to the VixShield Daily Market Summary. Morning Outlook for Tuesday, April 28, 2026. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution, signals only. Past performance is not indicative of future results. Today we are going deep on exactly why this place signal arrived, what it tells us about the volatility environment, and how we should think about strike selection as the session unfolds. The S&P 500 closed yesterday at 7,128, a modest pullback of roughly 46 points from the prior close. That left us sitting comfortably inside the range we had been monitoring. The VIX settled at 18.55, down another 1.7% from where it traded the day before, and now sitting comfortably below its 5-day moving average of 18.92. Which brings me to the term structure. The 3-month measure known as the VXV is at 21.08. That gives us a spread of 2.49 points in contango. For those of us running income strategies, contango is the calm, normal state where longer-dated volatility is priced higher than near-term volatility. It means the market is not expecting a volatility explosion anytime soon, and that decay works in our favor on short-dated premium selling structures. The dollar index slipped just a touch overnight, a gentle reminder that global capital is still comfortable taking risk. Meanwhile, Bitcoin and Ethereum are pressing once again toward the $80,000 area, but hitting the same macro resistance we have talked about all week. Gold gave back ground, and crude pushed higher on supply concerns. Taken together, the cross-asset picture still leans risk-on, yet with enough tension underneath that we stay disciplined. And here is where it gets interesting. Yesterday, in our closing analysis, we reminded everyone that when the expected daily range stays below 1.5%, when the VIX remains under 20, and when contango holds, the Iron Condor command tends to stay in force. That is exactly the setup we carried into this morning. Now let us look beneath the surface at volatility. The CBOE volatility index, known as the VIX, is trending lower. Realized volatility over the last 10 days is sitting at 10.83%, well below the implied level priced into options. That gap between what actually happened and what the market is paying us to insure against remains one of the most attractive features for premium collection right now. Our expected daily range indicator opened this morning at 0%, with the entry gate clearly marked as met. That 0 reading is not an error. It signals an exceptionally contained session is expected, which is precisely why the RSI engine delivered a place verdict across the board. The educational piece I want to zoom in on today is how we round strikes and why it matters on an up bias or neutral day like this. In the SPX Mastery methodology, we deliberately round our call wings upward and our put wings downward when the bias is neutral to slightly positive. This small adjustment gives us an extra buffer against the upward drift that tends to appear when fear is fading and dip buyers remain active. It is not random. It is a mathematical acknowledgement of how markets behave when realized volatility is this low. Last Thursday we said watch how the 10-year yield behaves if it breaks higher. Well, the quiet move in yields overnight only reinforced that neutral to constructive tone, which is why our strike selection today leans a bit wider on the call side. Now, the strategy insight for today. The RSI engine, our rapid skew AI engine, has once again verified a place signal because every entry gate passed. VIX at 18.55 expected daily range at 0, and healthy contango all aligned. Remember on Monday we laid out the week preview and said the Fed decision and manufacturing data would be the catalysts that could widen ranges. Those events are still in front of us, yet the current math says we can operate inside that expected range with confidence. Here's how the tiers look this morning. The conservative wing sits at 7110, 7115 on the put side, and 7220, 7225 on the call side for a net credit of 70 cents. The balance setup uses 7120, 7125 puts against 7205, 7210, calls for a credit of $1.15. The aggressive tier is at 7130, 7135 puts, and 7200, 7205 calls for $1.55. VIX at 18.55, elevated but still below 20. Conservative tier is green, safe to place. Balanced is yellow. Tradable, but size down if you are cautious. Aggressive is yellow. Tradable with extra caution. This environment is textbook for the Iron Condor command we have been running all year. The ALVH protection layers remain on standby, even though no new hedge entry triggered today. Our temporal theta mechanics are not needed yet, because we are not in a threatened position from yesterday's quiet close. The key lesson from the SPX Mastery methodology is this: when all three gates line up, we do not second-guess the math. We trust the process that has been back-tested through multiple cycles. Let us talk discipline for a moment. Tuesday is our analytical day, so I want to go a layer deeper. The fragility curve teaches us that the larger a position becomes, the more vulnerable it grows without proper protection. That is why we never chase size on a yellow tier day like today. We stay inside our predefined risk parameters. We let the premium we collected yesterday continue to decay in our favor, and we watch two things this session. First, any move in the 10-year yield that might shift the risk-on tone. Second, any surprise language out of Fed speakers that could jolt the VIX above 20 and flip us from place to hold. If you found today's summary valuable, share it with a friend. Both of you will receive 14 extra days of free trial access to the full VixShield podcast and signals. Your personal share link is waiting for you in your member dashboard. This market summary is brought to you by VixShield, your protection against daily uncertainty. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution. Signals only. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.